Okay, Wednesday, 12th of July, 2023. We have big data coming up here. Core CPIs and headline CPIs for US. You can see here, really the headline year on year set to come in at that expected drop of 3.1 prior 4. So the Fed is really getting there, from the dizzy heights of, what was it, 8 or 9% on the highs on inflation. Now we're down to 4% on the last reading. And if we get that 3.1% today, that's actually going to feed into quite a dovish Fed that it'll be a signal to say, hey, we don't need more rate hikes. The Fed can kind of take it easy, and maybe they can take a pause at this next meeting coming up. But it would take the hike. It would put into question another 25 basis point hike to come. And this one, the Fed are probably going to stay and pause. But either which way, how do we make money out of knowing what's going to happen? Well, really all we can do is say that, if we come in on that 3.1%, or 3.1, 3.2, that's going to be a dovish Fed. And I think stocks are just going to want to go up. All right. If we come in here, hot inflation, obviously, at a 3.5 or even a 4 or above a 4, that's going to feed into a Fed that are going to want to be really hawkish, and they are most probably going to want to hike at the next meeting. So you want to be careful getting long on stocks there. Should we come in on a beat? And it's kind of normal expectation here. Hot CPIs, I think we should probably have a pause in the market and probably keep going back down. So look, let's get over onto these markets here and see what we can see. Hold on a second here. Well, this is quite apt because the markets have been essentially just going up, right? And this is the S&P on the monthly charts here. So look, we are about off of the lows of October. We are up 28.44%. 28% even, let's call it, right? And so, I think as we just started a new month in July here, sellers have been bought back up here on this market. And we switch now to daily bars. We can kind of see something a little bit more meaningful about what we want to do today, right? I thought this pullback would actually continue on down. We are kind of capped at 44.93s here, really on the bid up. But I think ultimately on SPOOs, we have to get to the 45.42s before I think the sellers can really try and chow down on this, and before we get really just too extended. I mean, you could say we're extended at the moment, but then again, you could say we've been extended for the last 20 years, right? So apart from COVID pullbacks, okay. So I think this is going to happen. But look, as always, mind out there. Here is the SPOOs on the 30 minutes in the center of screen here. The 44.93 is coming up. This thing is balanced to the upside. I think if we tag the 44.93s, there may be some profit taking there. But if we get that soft CPI 3.1 or even lower, this is just going to be an absolute fiesta to the upside, I think. So if it comes in hot, I think we actually still could tag the 93s and then an almighty sell down of, I'd say, 1%. There's a bit of a trend here as well to keep in mind. Just this sort of a thing going on right now. I'll just do this. And these are the areas that I'm looking at. So, I think we're auctioning between the 44.86s and the 44.67s. So I think got a pullback on support here. Should we get the miss and then bid on up and look for this? And if we get the beat, I think we probably could do 93s and then have a mega reversal down, or we just go back down from where we are now and then probably break this trend. So that's the SPOOs. Oil, listen, don't think about selling it because it is in a mood for more to the upside. You're seeing this chart here is broken out of this sort of bear flag, bull flag in the bottom side here. Now, normally I wouldn't draw this, but you're just seeing at these points of drawing, these circles, the market has really respected these areas, and that's why I kind of found this to be useful. And so we're broken out over there. And listen, I think we can continue, keep going up here. So yeah, sure, 74.48 was the target to the upside. We hit that yesterday. I was expecting that to actually come in on Monday. Didn't happen though. But we are, just aggressively up here. So 76.25s and the rest, I think, for oil. So to come, we're actually back now looking at this gap that was formed over the first Saudi cut of a million barrels. It actually turned out to be 1.6 mil barrels, but we won't split hairs there. And what else can we look at? I think that's it really. To the good stuff to be looking at. Let's see, gold. Yeah, people want to talk about gold all the time. Look, I think we've made this move to the downside. Look, it's a dollar story, really. It really is a dollar story. I'm not looking to make a trade on gold today. If I do, it might be a fade on the 1949s or 50s. Or looking for potential shorts around here. I don't know. I need to see the data first and see how we react to the data. From there on, the yen. Let's have a little look at the yen, which has been kind of in terminal free fall. But look out here. The yen is on the way back, and that's going to be putting downside pressure on the dollar. That's going to be helping gold get its head back up, given the correlation effect. And you've seen the DAX is working further to the upside here. NASDAQ, same as all equities here, just romping to the upside in expectation of a miss on CPI, which I think we will get. All right, that's it for me for another pre-US. Please do check out duggancapital.com, where we have our training on there. And otherwise, stay lucky.